All right, so let's go ahead and get started then. As always, we're going to start off from the fundamental side. I want to start off from more of the global economy perspective and more of what's going on with COVID on a global scale, on an international scale, and then we'll kind of move through the individual currencies or individual countries. So starting off, we know that there's new variants coming out from developing countries. First, there was the variant coming out from Africa that was a huge concern for the World Health Organization, and then there was variants coming out from Brazil and a lot of other smaller countries. And then now there's another one that's coming out of India, which is one of the world's most fearsome outbreaks, is what they call it. And it's going to be classified as a variant of concern by the World Health Organization. So in India itself, it has caused a lot of deaths. It has caused a lot of increase in hospitalization, and now it's kind of spreading into other countries. It's been in the United States now. It has been seen in, or the cases have been experienced in UK as well. So a lot of different countries, and now as it spreads more, the more concerned that's going to become, because as new variants come out, obviously you need vaccines as well that are going to be effective for these variants. And the vaccines that we have right now, even when the variants from Africa and variants from Brazil were coming out, the companies Pfizer and Moderna and a couple of different companies that have the vaccines out already have said that these vaccines are not going to be as effective or effective at all for the new variants. So now that's where this trouble comes in. Now what we want to see as investors is, how do these governments and how do these international organizations or NGOs, or whoever may it be, World Trade Organization, for example, is working with the U.S. right now to make sure that new vaccines get out there. So how do all these players come together on an international level to make sure that we're not going to go into another lockdown, or we're not going to have more deaths increasing from a global perspective, where we have to go into a lockdown, where we're going to make sure that the major countries and the developing countries, they don't have that strain like we did back in 2020. Everyone with me so far?
Yeah.
Any other questions so far?
Nope.
All right. So at the moment, what we're seeing is that India's health system has been stretched to the breaking point by a virus wave that's proving highly lethal and difficult to control. So these are the type of things that brings in investor fear and market uncertainty. So if you start seeing the same exact statement or some variation of the statement coming out from different countries, UK, who is now opening up their economy, if they say something like this, then that means or points to essential or potential, potential lockdown again, or slowdown of this opening and economic support that we're seeing, where the government is working with the consumers, the businesses, the firms, in order to open up those sectors of the economy slowly but in a healthy manner, right? Or even Canada, for example, went into a lockdown recently. So if we start seeing this variant going into Canada and they're not able to open up their economy again because of this for a long time, then obviously that's going to bring in investor fear, especially those who are investing in the Canadian economy, or even in the US, for example. So these type of statements, this is what I will personally be looking out for in the coming weeks or so, and seeing like, how are these countries, developed and developing countries, how are they handling this new variant that's coming out of India? And you are going to see new variants coming out of all different developing countries and emerging economies. We are going to see that happening. There's really no like debate on it much, but the question that I have in my mind and what I'm looking out for as an investor is, how do these countries or governments actually handle that? So I want to see, how is India's government and India's health organizations, how are they going to make sure that the health system that is reaching the breaking point doesn't collapse, right? So that's what I want to see. Fearing an influx of infections and mindful of the new variant, countries like Singapore, the UK, and also there has been US as well, who has done this, I think it was last week, where President Biden also curbed travel to and from India. So now we're seeing essentially a repeat of what we saw last year as well for different countries that were kind of this in this red zone where they had high infection rates. So we're seeing the same exact thing where whichever country has this is in the red zone or who has a new variant coming out or has high infections, they're kind of being put in this red zone. And the rest of the countries that are now on like recovering from this economic lockdown that they had last year, we're seeing all those countries kind of come together and are like, okay, yeah, we're not gonna travel to or from these countries that are in the red zone. So that's what we're seeing right now from them. So that's one way that these economies, developing countries, are making sure that they are in the right position to open up their economies safely and making sure that the cases aren't increasing in their countries. All right. Any other questions on this before we go ahead and move on to UK? Everyone good?
Good.
All right. So this is the first article that I want to move on to, and then we'll look at the next one. But here, what we're seeing is that Britain's finances, they have this hole, an apparent hole that is starting to worry economists, and it is stoking concerns about the pound in terms of from a investor perspective. So there's a vast budget deficit that's been created by the pandemic, which is what they're not really concerned about. But all of this, when I'm reading this article, when I see that, is that this is just another piece of the puzzle. So this is a vast budget deficit that's been created by the pandemic, and then also the post-Brexit consequences that are happening, where a lot of the jobs there have been moved out of the UK into the EU. We're seeing a lot of the banks moving out of the UK as well. We're seeing a huge amount of money being moved out of the UK and into the EU and other parts of the world. So that's what we're seeing in terms of Britain's finances. The focus is gradually shifting to the current account shortfall, the difference between money coming into the UK and money going out. So they have forecasted that the gap is forecast to reach its widest since World War II this year as Britain grapples with post-Brexit ties with the European Union and an imports fueled rebound from the pandemic. So these are the type of things that are now coming together and they're starting to affect the pound and they're starting to affect Britain's finances. So these are some of the things that we did highlight in the beginning of the year when Brexit was pretty fresh. So we did talk about how the UK was going to be affected, and now we're starting to see it in terms of imports, exports. We're starting to see it in terms of trade deals as well. So we saw that as soon as Brexit happened, that UK was already starting to secure some trade deals with other countries. We saw Japan and UK, we saw Canada and UK. We saw that UK was working on a trade deal with the US, but that's been kind of put on the back burner for now, especially under the current administration. And now with the pandemic, that's kind of just adding on to those post-Brexit consequences. That will test the willingness of foreign investors to keep on funding the spending habits of the nation by buying Britain assets. So now this is kind of putting pressure on, I wouldn't say putting pressure actually on foreign investors, but it's more of, it's bringing in that uncertainty. So how are the foreign investors going to react to this decrease in Britain's finances and all of these kind of post-Brexit consequences, the pandemic, all of that coming and hitting UK's finances at the same time. So first of all, how is UK's government going to handle that? Bank of England, how are they going to handle it? How is the finance ministry, for example, how are they going to handle it? How is the government going to handle that? So what's going to be the situation with inflation, for example? Are the interest rates going to eventually increase? Is the economy going to be in that position? So all these things kind of come into account. So some of them may be low impact news, quote, low impact news. Some of them may be higher impact news like interest rates and things like that. But these are the factors that come into play when foreign investors are looking into economies, and they're looking into whether or not to continue buying British assets. There's data coming out on Wednesday that will likely show that UK had one of its biggest trade deficits on record in the first full quarter since completing the withdrawal deal from the EU. That is Brexit. So this is when we're going to start seeing on Wednesday, the data that we see, that's going to be reflecting Brexit consequences that are starting to settle in finally. Any questions so far?
Good.
Everyone's pretty good?
Yeah, very good.
All right. And then now,
Yes.
all right, perfect. So now the things that we were discussing just a couple of seconds ago, the Bank of England, which upgraded the UK's economic outlook significantly last week, is predicting an 8.5% surge in imports and almost no growth in exports. The IMF, the International Monetary Fund, says Britain will have the biggest shortfall among major industrial nations. So now we're starting to see that obviously UK has been hit hard, but again, the same exact questions come into play, and those are the major questions. How is Bank of England going to support Britain's economy from a financial perspective? Are they going to continue injecting money into the economy through stimulus, through quantitative easing? How is the government going to make sure that employment levels remain at stable levels, pretty much? And how are they going to make sure, how are they going to react with inflation? So much money moving out of the UK, not so much coming into the UK. How are they going to maintain confidence of their foreign investors? So that's what this article is about. So far, we've seen from the beginning of the year, we've seen this entire rally in the pound, and that was because of the optimism surrounding vaccines and their mass vaccinations, and the fact that they were leading in opening up their economy compared to other developed nations and developed economies. So they were the leading ones. They're starting to open up their economy slowly. So I believe it was May 17th or 27th, one of those. So in the last 2 weeks of May, they're hoping to ease some more restrictions on the economy. And then in June, they're hoping to open up their entire economy and international travel. So that brings in a lot of optimism around that. But now as we're seeing more effects settling into the finances, this is what foreign investors are looking at. So we may see as GBP approaches some key levels on those yearly, monthly, quarterly, weekly timeframes, we are going to see some consolidation happening. And that is the uncertainty that is being reflective from the fundamental side into the technical side. Make sense?
Yeah, makes sense.
All right. And one way, so we talked about Bank of England up top here, which is predicting a surge in imports, but almost no growth in exports. And as we go further down, we see that the government is also trying to lure in investors by turning Britain into a Singapore of Europe with low taxes and light touch regulations. So that is one way that the government's trying to bring in more investors with low taxes and light touch regulations. All right, and so let's go ahead and move on to the next article. So in the past couple of articles, just to kind of sum it up real quick, in the past couple of articles pertaining to British retail sector, PMI, and all of that, what we've seen is there's been a shift during the lockdown where majority of the British population has been shopping online, and we're seeing that the consumer confidence from that perspective is starting to pick up again, and the retail side of the economy is starting to pick up some more activity. But also, that doesn't necessarily mean, just that statement itself doesn't necessarily mean that the retail side is doing great, because the physical stores themselves, they are the ones who are incurring losses. So a lot of the shopping has been happening online, and it's just not the UK, in the US as well, in Japan as well, in India as well. A lot of the shopping has been done online because of the lockdown. People couldn't really go out much. There was, for example, low capacity into malls and things like that. So there are still people going into malls, but not as much. A lot of the shopping being done online. So that brings in the optimism from the retail side. But now the store closures and job losses are becoming a threat to Britain's retail sector, despite an increase in activity following the easing of lockdown restrictions. So what we see so far, just putting these pieces together, is that in the previous article here, we were talking about Britain's finances from post-Brexit, pandemic, all of that. And now we're digging a little bit deeper into that. And one part that we're looking at is the retail side itself. So physical stores closing down, job losses. So those are parts that we're seeing that are specifically being affected. And these are the similar things that are kind of rolling into the manufacturing side as well. So we're seeing that how the economy is being hit hard, especially especially even after easing the lockdown restrictions, opening up the economy, and actually encouraging the consumers to go out and spend more money. So despite all of that, we're still seeing that this is being seen as a threat. As we continue further down, let's see here. So there was actually a part about where they're talking about hospitality not actually increasing their numbers until the bars and pubs are able to accommodate a lot more people. So but basically they went into, right here. A full recovery in hospitality would be delayed until bars and restaurants were able to take customers inside. So until they're able to accommodate a lot more people. What we're seeing is a lot more of outdoor seatings and things like that. But outdoor seating is not able to accommodate to the full capacity for these restaurants, these pubs, these bars. And so being able to open up outdoor seating and indoor seating and all of that is going to help increase from a retail side. It's going to help increase some of those numbers. Any questions? Make sense so far for everyone? I kind of just summed it up.
Continue.
All right. We're going to move on to the US now. So bringing in a little bit of more optimism, seeing that Pfizer and BioNTech COVID-19 vaccine is now clear for use in younger teens. The way that this brings in optimism is now a wider group of people are being included in these vaccines and they're able to receive more protection. So that's going to help kind of move us past the 75% of American population that is being protected through these vaccines. Now it's kind of including a broader group of people. So we had first the frontline workers, we had the elderly in care homes, and then you had people with like underlying diseases, and then you had adults over the age of 18, and now you have younger teens who are being included. So that itself is just bringing in optimism. That's pretty much what this entire article is about. So that was kind of summing it up. And I can go ahead and send these articles in the group later on if you guys want to read through it. But that's pretty much what the optimism is coming in from the US dollar perspective. Now this article is interesting to me because this is going to tell you exactly what the Federal Reserve is looking at. So if you're trading any pair that has the US dollar currency in it, or even gold, for example, if you're trading any of that, this is the article that you want to look at because this is telling you exactly what the Federal Reserve Chair is looking at. So they're looking at, for example, Black unemployment levels. So they want to take a look at that. Unemployment for Latino Americans as well, white Americans, Asian American employment. And they're also looking at low wage earnings. So the following article is actually pretty interesting. It's pertaining to wages and earnings and employment side itself. So taking a look at that, they're also looking at non-college participation. So they're saying that Americans without college educations are continuing to struggle with employment prospects. So they're looking at that specifically. And what we want to see is like, okay, well, how are you going to support those people then? Are you going to pay those people to get more skills or, increase their education or anything like that? So these are the exact things that the Federal Reserve is looking at. And if they see an increase in these numbers, that's when we can start to see the monetary policies start to shift a little bit. Maybe go from expansionary going back into contractionary, and they want to see that these are things that they think are going to help support the economic growth. So this is exactly what we're looking at. I'll go ahead and send this as well. But here's a look at a few of the indicators that Powell has said he's watching to judge progress towards a new objective fared last month. And this is the data that's being published by the Labor Department. And in this article, I found that very interesting because Biden here is saying he's urging US companies to boost pay for workers to spur hiring after disappointing job creation in April, so low like NFP numbers and all of that. And then as you scroll further down, you actually see that he's saying anyone offered a suitable job must take the job or lose their unemployment benefits unless they have specific concerns related to COVID-19. I found that interesting because suitable, I think, would be subjective from person to person. What they may think is suitable may not be suitable for someone else. Maybe they mean in terms of uh, wages. So if you're getting like minimum wage or above, and if you're able to do the job, maybe that's what he means by suitable. But I found that very interesting because they're not really giving people a choice. So they're telling US companies that increase your pay for workers, but they're also telling the workers that, well, if you're offered a job, then you kind of have to take it unless you want to lose your unemployment benefits. And then he's also encouraging vaccination so Americans feel comfortable taking the jobs as well. But you're not really, as consumers, you're not really, or workers, you're not really getting much of a choice here. And so he's increasing childcare capacity, reopening schools, and boosting the rate of vaccinations to help mitigate hiring issues. So this is one way that he's kind of helping boost up these unemployment numbers that we see here: low wage earnings, Black unemployment, Latino American unemployment, and then maybe also it's going to ripple into non-college participation. So that's what we see so far. We're seeing that clearly. The U.S. Federal Central Bank, which is the Federal Reserve, and the government, they're kind of working together in order to help boost the employment numbers and help boost economic recovery. Any questions on any of these articles? It makes sense to everyone? You kind of understand what's happening for everything?
Makes sense to me.
All right, awesome. So let's just look at the calendar real quick. Let's see what we have so far. Going into London session, we don't really have much from GBP side. Euro, you have economic sentiment, so you definitely want to watch out for the overall Eurozone economic sentiment and the German economic sentiment. Germany is the leading economy of the Eurozone, so whatever happens there definitely impacts the entire Euro. As we go further down, you have small business index coming out 3 a.m., which is also London time. And then you have job openings in New York session, and then you also have Governor Bailey speaking. And right after that, you just have FOMC members speaking back to back. So you want to watch out for these as well if you're trading any USD pairs. Tomorrow's pre-London session is going to be GBP heavy. So whenever you see a ton of GBP news coming out in pre-London session, you want to make sure that when you're trading London open, you wait a couple of minutes. I usually wait about half an hour, 15 minutes to half an hour before looking for any entries. And that's because you want to let the market price in all of this data that's coming out. So you are gonna see market kind of reacting to this data as soon as it comes out, but the most impact or the most reaction, you're gonna get it as soon as the market opens up. That's when the traders are coming in. Wednesday, you have the EU economic forecast. So you want to take a look at that if you're trading any euro pairs. And you also have Governor Bailey speaking again. On Wednesday, New York session, when the market opens up, you have CPI news coming out, so watch out for that as well. This is the consumer price index, and it accounts for majority of the overall inflation. So this is also what you want to watch for, because this is exactly what the central bank is going to be looking for as well. As we go further down, if you're trading USD CAD or US oil, you want to watch what the crude oil inventories number is going to be. So you have that to watch out for. As we go further down, Thursday, you have a bank holiday from Euro. So if you see a decrease in volume during London session, I wouldn't be much surprised. And then you have unemployment claims coming out. So this is another thing that you want to watch out for, because unemployment claims, job openings, all of that, these are, again, what Powell is watching out for, the Federal Reserve is watching out for, but also these are things that help you kind of get ready for NFP the following month. So watch for these. And let's see, Governor Bailey speaking again on Thursday. And then on Friday, the most important thing is retail sales coming out of the US. And then you also have consumer sentiment and inflation expectations. Any questions on the fundamental side?
All good.
Let's start off with GJ first then. We're going to start off with the yearly time frame. So clearly we're approaching some of those significant levels on the yearly time frame. It seems like we're trying to come up for a wick fill. So the very first thing to note is we've just broken past this yearly minor resistance at 152.300. So I will make that red. So when we drop down to lower time frames, we know that this was a yearly resistance that price broke out of. You also have the all-time lows all the way down here. Make that black. With a ton of liquidity grab down here. How do you know that this is liquidity grab? Because this is the exact area where price made a support, made a bottom wick rejection, came back up, and then had nice volume to the downside where it created those all-time lows, filled the previous wick right here to the left. And once it made that all-time low, there's a ton of volume to the upside. This drop here is when Brexit was introduced. Even after Brexit was introduced and we were kind of in this overall downtrend, even when Brexit was introduced, price just came and tapped into this zone here. And then we saw that price was pretty much stuck. But see how many times that price has tapped into this area and rejected it with a major bottom wick rejection. And when price made the last bottom wick rejection here in 2020, in 2021 here, price respected the support, and see how hard it's pushing up with a ton of volume. So this is an important level, because as you can see clearly on a yearly time frame, this was a downtrend, and if price can break above this level, give you a nice retest, maybe after filling this wick, and continue back up, this is a break of that yearly downtrend, that bearish structure. So once this wick is filled, as you can see, there's really nothing stopping it from coming back and tapping into these high levels before Brexit was introduced and the pound weakened against the yen. Make sense?
Yep.
Any questions?
No question.
All right, and I'm going to make this a whole number since we're sitting at 186,900. We could just do 187 flat. And another thing that I'm going to mark up here, and I'm going to put it in red, is this 156,700, which is that yearly wick fill. So this is why WF stands for, yearly wick fill. That's what we're coming up for. So as we drop down to the quarterly, that's the same exact area that we made a zone on the yearly time frame. So on quarterly, that's exactly where price made a support, did a little bit of consolidation, dropped down to make the all-time lows. Finally, it pushed up, gave you a little pullback, created a new support, higher low, and then price just continued, rallied up into this next zone where you have a little bit of a fake out and then continuation back down. Even here, this year, price made a bottom wick rejection right into 148, 200, 300 area, made a bottom wick rejection right into this level. And as you can see, this is the same level that price rejected. So you see a little bit of consolidation here. So that's the same level that price rejected and continued back down. Same thing here, top wick rejection. You see a break above, price fails to continue, comes right back down, and then respects this area as resistance after that. So once price broke above it with a lot of volume last quarter, it made that bottom wick rejection this quarter, and then now it seems like it's continuing bullish. Seems like there's really nothing stopping it from continuing back up to 156,700 and maybe even a little bit higher into that 160 level to kind of tap into these minor resistance levels that we see to the left. Right about there. So we broke above, basically what I'm trying to say is we broke above a key level, we've retested that key level or that key zone, and now we're continuing bullish. But from a fundamental side, what we're seeing now is the investors are kind of getting uncertain. So as we drop down to lower time frames, you might see a little bit of consolidation happening here. And that's the uncertainty from the fundamental side that's being reflected on a technical perspective. As you look on the monthly, this is the classic break and retest that you have right here. So even on the monthly time frame, we have price respecting this area as resistance several times. Last month, we closed bearish, still rejecting the zone here. And now this month, we're continuing bullish, breaking the highs. As you can see, even on the monthly time frame, there's really nothing stopping it from continuing back up to this 156, 700 zone. So what I mean by zone is it could be anywhere between 156, let's say 500 to 700, anywhere in this area here is where price is continuing up, right into that area. Even on a weekly, same exact thing, continuing bullish. So here, as you can see, price made that low, made a low, pulled back right into that area, grabbed some liquidity, continued bullish to make a new high, pulls back. Along the way, all it's doing is retesting the highs, retesting the lows, and finally we continued bullish with a lot of volume to the upside, came back, made a higher low, and now it seems like it's going to continue bullish as it breaks the previous high. Continues bullish to make a new high, maybe we get a pullback as soon as it taps into that wick fill, and then after that we need some strong fundamentals to continue bullish. And then next stop being around 160, 162, 163, any of that. And then after that, it's going to be around 168, tapping into 187 ultimately. Any questions so far? So what you have is price currently breaking out of this specific zone here.
So you would technically still wait for the retest, right, before buying in?
So as we drop down to lower time frames, then we'll see like if there's already been a retest or like what are we gonna look for. But just on the weekly time frame, the fact that we already got that nice little pullback right into this zone here, got a support being made and then continuation up. Now we know for sure that it's gonna continue bullish, and that's the side that we're gonna be on when we're looking for our swing trades.
Okay.
So this is where I answer your question basically. So on the daily time frame, see how price keeps tapping into this area over and over again, keeps rejecting it. It does break out of it once, but it struggles to continue, comes right back down with a lot of volume and then rejects it here. So when you see a lot of volume in that following candle, which makes sense where price just consolidated into this little area. So whenever there's consolidation on higher time frames, just know that there's going to be a ton of volume that follows. So we got consolidation here, price finally broke out of it. So yes, now we're gonna wait for some sort of a pullback, at least respect this little high that price is breaking above, and then continuation bullish. Once we get that, that's when we enter. So this could essentially on a daily time frame, this could mean a bottom wick rejection somewhere into this area, and then it flips bullish and continues. Or maybe this daily candle closes bearish and the next one makes a bottom wick rejection and then continues bullish, and that's where we're going to look for our entry and then continue. Make sense?
Yeah, yeah. Because the reason I was asking is because this right here essentially is like usually in my simulations where I get stopped out, and then like just pretty much a fake out. So that's why I was asking, because right here I guess I would assume it was the retest and then the entry right here.
So pretty much what we're looking for here, I see what you're saying and I agree. What we're looking for is, actually let me pull that out. So now that we got a bullish close above it, Now what we're looking for is one, either price flips bearish and then closes somewhere here with the top wick, bottom wick rejection, any of that, or price makes a bottom wick rejection right into this area, and then after that it flips bullish and then it continues and makes, leaves a top wick or whatever it may be. But as long as we get a rejection somewhere down here, that's what we're looking for. So somewhere right into this area, that's where we want that bottom wick rejection or a bearish candle close or any of that, and then continuation bullish. And the reason for that is because price needs to correct this entire bullish move that it's made here. Make sense?
Yeah.
So I guess I'll leave that on, but that's going to be the 200 level. Yeah, so on the 4-hour, what you see is consolidation right into this area, and even now what we see is consolidation happening. So either we could break out of this consolidation when when Bailey speaks tomorrow. So maybe it could just consolidate until New York session, or maybe going into London, we see a little fake out, price comes all the way down here to reject this, and then continues back bullish. Again, these are all zones, so I'm not saying exactly 153, 200, but I'm saying it could be anywhere between 150, let's say right up top here, so anywhere from like 153, 300, coming down to like about 153 flat, any of this area here, right? So bottom wick rejections is what we're looking for. If we don't get that, and all market does is just consolidate, and it's really waiting for what Bailey has to say tomorrow in London's New York session, we could have just price consolidating and then a ton of volume to the upside like we did here, where the market simply consolidated into this little box and then it just broke bullish. So that's what we're going to be looking for. What does Bailey say tomorrow? And then as we drop down to lower time frames, we would get those confirmations from 30-minute, 15-minute, maybe even from the hourly, where you have a break and retest. But from a technical side, you will always get the confirmation of where is price headed. So that's where the details come in. 2 hours, same exact thing, and then 30-minute, same exact thing. But as you can see, we're still quite bullish here. So I do think price is going to consolidate, and then we're going to see some nice volume. So got that nice bullish volume to the upside, price making those lower lows, lower highs, all the way up top here. And then now all you have is market consolidating here. But as you can see, if I remove this, as you can see, price is still making those higher lows, even though it's consolidating. So you have consolidation, and then maybe we come back up and tap into those equal highs. So if you're scalping this, then how do you take advantage of this information that we just talked about? If price is consolidating into this area, obviously you wouldn't be looking for any trades. This is the 30-minute time frame. But if you're looking for your 10, 15 pips or so, if price continues bullish, breaks out of this, then you have 16 pips coming up to that wick fill. So taps into that, maybe taps into equal highs, and then it comes right back down. So either way, you got to be prepared. You got to wait for the market to open up, the London session to open up in about an hour, and then make sure you have the confirmations. And what I mean by that is either a break and retest, or let's say the next candle closes bullish above this, wait for the next candle to make a bottom wick rejection and then continuation back up. Make sense?
Makes sense.
Any questions on GJ before we move on to gold? All right. So for gold, what we have is that yearly resistance being made up top here that price has already respected. So let's round it up to 1680. So that's that yearly resistance. Price has already respected that, made a huge bottom wick rejection. We are starting to break above this top wick that we've talked about, that 1800 flat. So now we are breaking above that. Now as we go down to lower time frames, the next key levels are up top here. So 1900 flat is the next key level. If price were to flip bullish, that is what we're targeting. As long as this 1800 level here is being respected. The next target is 1900, and then after that, we're gonna target some of these key levels. So after that actually would be the wick fill, which is 1960, and then above that. So what we have from a fundamental perspective is whenever you see global tensions increasing. So for example, right now we have the COVID variant from India coming out. So that's causing market uncertainty, especially in foreign investors. You also have the UK trade or UK finance deficit. So that's also causing some uncertainty. So whenever you have global tensions or any sort of like uh, economic tensions, that's when you're going to see gold prices and commodity prices and safe haven currency prices increasing. As we drop down to the quarterly, we see that obviously this was the same exact zone that price has been respecting as resistance. That's the same level where price made a huge bottom wick projection, still closing bullish, and then we dropped below. So now we're starting to break above this level. As you can see on a quarterly time frame, there's really nothing stopping it from coming back up to 1900. So that's the target that we're going to be looking at as a position trade. On a monthly time frame, what we have is price now starting to break out of this downward bearish structure, and this month we're already very bullish, now coming back up, targeting this entire 1900 area. So if you're looking for a position trade, then as you drop down to lower time frames, you're going to wait for some sort of a pullback, some sort of a support to be made, and then a continuation back up bullish, and that's when you're going to be targeting 1900 flat. This is where you're going to go completely risk free and then let it continue up to about 1960 or even 2000 level flat up here as the final TP. So this is for your position trade. What does that mean on the weekly time frame? So weekly time frame, you have that huge bearish structure tapped into the 1680 level down here. So tapped into that, grabbed liquidity, continued bullish from here. So this week I'm looking for some sort of a bottom wick to be formed and then a continuation back up. As price makes a bottom wick rejection, I'm going to look for entries on lower time frames, daily time frame, 4-hour time frame, and that's when I'm going to look for my buy entries up to 1900 with stop loss being pretty tight right below 1800 flat. So what we're seeing on the daily time frame now is price kind of sitting in this key level. So if you look to the left, that's the same level that price has respected several times. So it respected and rejected. So it's the same level. When price continued bullish, you have that break and retest, a bottom wick rejection, continued back up, tapping into previous consolidation areas. You got a nice little pullback, same thing, respected this area support again, and then that's when you saw new highs being formed, pullback, and then that little fake out. Even when it dropped back down after that fake out, it's the same area where price made support and rejected this area with wicks several times. And then dropped back down, came back, created a new lower high, and then came right back down from there. So this is a very key level. As you can see now, you're starting to see volume die down. So this is the bullish candle close, made a top wick rejection. Last daily candle closed bullish right into this area, barely a bottom wick rejection, which tells you that price didn't really try to go bearish here, right? But it made a top wick rejection and barely broke the previous high. In the current daily candle, you have a bottom wick rejection. Maybe we're going to come back up, try to fill the top wick here. But what I'm really looking for is support to be formed on the daily time frame. So either right into this zone here or maybe a deeper pullback. But I'm waiting for support, some sort of support to be formed, and then continuation back up. That is going to be your entry for your swing trade or for your position trade. So it could start off as a swing trade, turned into a position trade, coming up and targeting 1960 flat as your final TP. Make sense? Any questions?
Nope.
All right, so even on 4-hour, we're starting to see that price is kind of struggling to break above the zone that we just talked about on the daily time frame. Price closed bullish, got a pullback, got a support being formed. So this, if you were looking for a day trade or a swing trade or anything like, or a scalp, sorry, day trade or a scalp, this would have been a perfect entry as price made support and the next 4-hour candle made a bottom wick rejection. That would have been the perfect entry to come back and do the wick fill. So price came back up, fill the wick, comes right back down, and it's creating support. So here I know for a fact that price is going to continue bullish. Gold is still bullish here, and the reason why is because price is still making these higher lows. But now what I'm looking for is price going to drop back down further, then create a support somewhere here again, and then continue bullish? Or is price just going to consolidate in this overall area until it finally breaks bullish? For any of that to happen, obviously we're looking for fundamentals to help push price one way or another. And this week we have, as we scroll down, you have CPI news coming out and you have retail sales coming out. So I'm really looking towards Wednesday. I'm looking towards the CPI news, and I think that would be the catalyst that's going to help gold move very nice up to 1900 levels. But until then, obviously drop down to the 2-hour, 1-hour time frame and look for your scalp opportunities if they present. So don't try to force a trade here because obviously price is consolidating into this little zone. So wait until price gives you clear break and retest, even drop down to the 30 or 15 minute. But wait until price gives you clear structures and gives you clear confirmations, and then look for your entries. What I mean by that is if you were looking for a scalp opportunity, this was the clear structure that price made. And then as it dropped back down, that was another clear structure that price made. So if you're looking for an entry here, you would obviously, as we discussed in the simulation on Friday, map out exact levels where price is consolidating or doing most of its price action. And then as price breaks above it, that's where you're going to look for your entry. So most of the price action was happening here. As price pulled back down and created support, respected pretty much this entire, like retraced this entire bullish move up, and then respected this consolidation resistance, your entry is going to be somewhere here, and then continuation up bullish for a wick fill. Right, so that would be your scalp opportunity turned into a day trade. Same thing here, you're going to look for where did exactly price consolidate, where is a majority of the price action happening, which is right into this specific area right here. Right, so as price breaks below that, that's when you're going to start looking for your entries, and then continuation back down. So maybe you could find the same entry or entry on the 15-minute for the same exact price action, and then as price continues down, targeting previous lows. Make sense? Any questions?
Just a quick one. So where we're at right now, would this be like where it's doing some price action right now?
Yep. So now if you're gonna look for, yeah, so this is exactly where the price action is happening, right into this area. So if you're looking for any buy opportunities, then you're gonna wait for price to break above, make a bottom wick rejection, or give you a break and retest or retracement or anything like that, and then continuation up. Then you would be targeting previous highs, which would be right into this area or even up top here. So that's that quick scalp that you're going to be looking for. If price breaks below this, then clearly wait for this zone here to be broken. And then as price continues back down, making sure that your entry, when you take your entry, you're making sure that price is clearing out all of this area. Then there's really nothing stopping it from coming back down here, right? Maybe you could even target some of these wicks. So that could be one target, partial level as it continues down. This is your full TP, but by the time price drops down to 1820, you're looking to go completely risk-free. Same thing here, as price comes back up to 1846, you should be risk-free. Make sense?
Yeah, thank you.
Awesome. So that was the trade breakdown.
Yes.
We are going to come back in 20 minutes and then we're going to trade live. And I will send the link in the group chat again.
Alrighty, thank you.
Yeah, see you guys in a little bit.